Iraq's bold new monetary policy. Is the dinar finally on the path to revaluation? After years of speculation and silence, the Central Bank of Iraq, CBI, has broken through the noise with a bold and far-reaching policy announcement. The move has sent shockwaves through the global currency and financial communities, particularly among Iraqi Dinar (IQD) holders, who have long speculated about a potential revaluation, an RV of the currency. While the CBI has stopped short of officially declaring an RV, the new policy shift sends the strongest signal yet that serious monetary reform is underway, and that Iraq is preparing for a more independent and modernized economic future. This new policy package is threefold: a surprise interest rate hike, a diversification of foreign reserves, and the launch of a centralized digital transaction system. Taken together, these measures suggest a strategic effort to strengthen the Iraqi dinar's foundation and elevate its role in both domestic and international financial systems. 1. Interest rate increase. A signal of tightened monetary control. At the core of this announcement is a 50 basis point increase in Iraq's national interest rate. While modest by global standards, this move is highly significant in the Iraqi context. Iraq has long used monetary policy to maintain stability in an oil-dependent, post-conflict economy. Increasing interest rates now signals a more proactive approach to managing inflation and supporting the dinar's value. Raising rates helps reduce excess liquidity in the system, curbs inflationary pressures, and encourages savings. But more importantly, it sends a strong message that Iraq is prepared to let the dinar stand more firmly on its own, without the heavy interventions that have defined CBI policy for years. This is a foundational step for any country looking to strengthen its currency and potentially reintroduce it to international markets at a more favorable rate. 2. Diversification of foreign reserves. Reducing dollar dependency. The second pillar of the CBI's policy shift involves a significant adjustment to Iraq's foreign currency reserves. Historically, the CBI has held most of its reserves in US dollars, a byproduct of oil exports and global trade practices. However, the CBI has now announced its intent to diversify those reserves, moving a portion into gold-backed assets and alternative currencies such as the euro and Chinese yuan. This strategic move indicates a desire to reduce reliance on the dollar, and by extension, U.S. monetary policy. It also positions Iraq to participate more flexibly in international trade with countries that are already moving away from dollar-denominated settlements. This could include key trading partners like China, India, and Turkey, all of whom have shown openness to conducting business in local currencies. Diversification strengthens Iraq's financial resilience, protects its reserves from geopolitical shocks, and increases investor confidence in the stability of the dinar. 3. Digital transaction system. A step toward a digital future. Perhaps the most forward-thinking element of the CBI's announcement is the rollout of a centralized digital transaction verification system for all dinar-based payments and remittances, both domestic and international. This digital infrastructure will allow every dinar transaction to be processed securely, transparently, and with fraud protection. In essence, Iraq is laying the foundation for a digitally enabled financial system that is better integrated with global digital trade norms. This move mirrors steps taken by countries preparing for central bank digital currencies, CBDCs, or greater international usage of their national currencies. The significance of this cannot be overstated. In a world moving rapidly toward digitization, Iraq is signaling its intent to join the ranks of forward-looking economies. This new system improves the dinar's credibility, facilitates smoother cross-border trade, and offers better security for Iraq's citizens and investors. Why now? Timing and strategic intent. The timing of these reforms is anything but random. Over the last several years, Iraq has been carefully repositioning itself on the global economic stage. From rebuilding ties with global institutions to securing trade deals with key partners, Iraq has been laying the groundwork for a reformed, revitalized economy. Crucially, many of Iraq's new trade agreements include provisions for settling in local currencies. This is consistent with the broader trend of de-dollarization in many emerging markets. Iraq's monetary shift now aligns with these developments and suggests that the country is ready to take greater control of its financial destiny. Is revaluation next? It's important to be clear, this is not an official revaluation announcement. However, the steps being taken are the exact kinds of preconditions required for a successful RV. Raising interest rates helps control inflation and attract capital. Diversifying reserves strengthens financial security. Implementing digital infrastructure boosts transparency and cross-border usability. Put together, these reforms create the ideal conditions for a revaluation. And history shows that countries preparing for currency reform often follow similar patterns. For example, Kuwait restored the value of its dinar following the Gulf War through a phased approach that included economic stabilization, reserve management, and institutional reforms. Vietnam is another contemporary example of a country quietly modernizing its financial system to support a stronger currency in the future. With one of the largest oil reserves in the world, Iraq also has the advantage of resource-backed credibility, a key factor that would lend strength to any future increase in the dinar's value. Potential risks and challenges. Despite the optimism, it's critical to recognize that the road ahead still carries risks. Political instability, internal corruption, and regional tensions could all derail progress. Additionally, global oil price volatility, a critical factor in Iraq's economy, could impact reserve strength and foreign investment. There is also the question of how international institutions like the IMF or World Bank will respond. Their recognition of Iraq's reforms would be a strong indicator that the global financial community is ready to welcome a more independent Iraqi economy. What should dinar holders do? For those holding IQD, this is not just another routine update. It's a pivotal moment that warrants close attention. While no one can predict if or when an official RV will occur, it's clear that Iraq is preparing the necessary groundwork. These reforms are real structural changes, not just speculative headlines. While this isn't financial advice, dinar holders should stay informed and monitor developments from the CBI and other economic indicators, such as exchange rate movements, changes in oil trade practices, or public statements from global financial institutions. Conclusion: a new chapter begins. For years, the idea of an Iraqi dinar revaluation has lived in the realm of speculation. But now, for the first time in a long time, there's real movement. The Central Bank of Iraq has unveiled a reform strategy that aligns with the steps taken by other countries prior to major currency transformations. While the RV itself hasn't happened yet, Iraq is clearly taking responsibility, building readiness, and pursuing reform. These are the cornerstones of any strong currency and of any successful revaluation. The future of the dinar may not be written overnight, but it is clearly being built. Step by step, Iraq is moving closer to economic sovereignty. Whether that journey ends in revaluation remains to be seen, but one thing is certain: the world is watching, and the next few months could define the next chapter of the dinar's story.